Welcome back to another episode of Asset Coach and Tax Strategist. My name is Robert Wolf, and I'm an Asset Coach and Tax Strategist. Welcome to our channel. If you're a subscriber, thank you so much for subscribing. Continue to give us some thumbs up, add any comments down to this comment section. Let's dive into today's content, today's episode. And so really it's about this, it's from July. So I know we're, of this recording, we're in August. So it's a July article, which I still think is appropriate to address because Jerome Powell is still has a job and kind of understanding a little bit of the dialogue, the debate of what's going on, why Trump's wanting Jerome Powell to resign or why he wants to get him fired, what he is not doing for the economy, and what a lot of this too is I think is a little bit of a posturing thing just from my research and watching some of the other YouTube guys I watch and some of the other content. Really that this is a devaluation process that the government's going through. The national debt as what it is. And we've done some episodes on national debt and talking about who owns the national debt, all that fun stuff. But one of the reason why the current administration just released billions of dollars of treasury bills is because they're short-term debts. They're short-term loans, less than a year. Why? Because he doesn't want to refinance all these long-term debts at a higher interest rate, which is why he wants Powell to lower interest rates. When interest rates are lowered, then he can finance all the long-term debt that the U.S. has at lower interest rates, therefore bringing the cost to you and I as taxpayers lower. When you add the tariff revenue that has been generating and it has been in the billions of dollars of collections on a monthly basis, if you're looking at the new One Big Beautiful Bill tax benefits, these are all ways the tax benefits, these are all things that are helping to offset this devaluation of the dollar. Okay, this has happened. I've done a video on this previously as well. I think it was like a 3-part series going through this. So this is part of the process, but this is so important, and I think why Trump's so frustrated because he really needs the interest rates lower. It's not for the economy; it's for you and I as taxpayers not to having to foot a high interest cost on the debt, the U.S. debt, when they start issuing these bonds. And so that's why they're starting to issue a lot of treasury bills, a lot of short-term stuff. So interest rates are short-term. So when the interest rates eventually go down, and that's kind of where I'm sitting pat a little bit on some of the strategies that we're looking at for some of our members, is because of the interest rates. It's better for the interest rates to drop for us to be able to do some of these strategies with the lower cost of interest rates so that we can go and deploy funds into other strategies with a lower cost. It just allows, obviously, your wealth to increase. No difference. It's basic economics, basic finance of understanding that. So I'm going to share my screen and go through this article that we have here. And I cut and paste. This is CNN. So as you can imagine, with a CNN article, this is going to be leaning left, but I haven't read it, so let's go through it and see. Trump says Powell is costing the U.S. a fortune by not lowering rates, but firing the Fed chair may not fix the issue. The key here is the interest rates need to be lowered. That's one of the first steps, okay? And so let's go through this. And this last part, firing the Fed may not fix the issue. This is the left-leaning kind of conversation of if Powell gets fired, then Trump's still on the hook type thing. So, but let's see what the article says. As part of his campaign to get rid of Jerome Powell, by the way, it wasn't his campaign to get rid of Jerome Powell. It was part of his campaign to make America great again and by fixing the economics. Now, if you're saying part of his campaign was to get rid of Jerome Powell, we as voters didn't vote for Trump because he said he was going to get rid of Jerome Powell. Most voters have no idea what Jerome Powell does. So this right off the bat, this is false. This is not true. Now talking about the Fed chair, talking about the need of lowering interest rates may have been something he discussed and talked about on the campaign. But at the end of the day, nobody voted for him. He didn't become president because he ran on the campaign of, we're going to fire Jerome Powell. Okay. President Trump has blamed the the Federal Reserve Chair for costing the countries hundreds of billions of dollars by not slashing interest rates. And that is true. Powell's been in office for quite some time. He's not the only one to blame. Yeah, the other administrations are to blame, including Trump and including the previous administrations. But now we've had so much time that has passed. I mean, think about from Trump's first session, then we had COVID, right? So 2016 is when he got elected, and now we're almost we're in 2025, so we're almost 10 years removed from that. That's a long time, and having higher interest rates as we go through this. You have cost the U.S. a fortune and continue to do so, Trump wrote in a handwritten note to Powell that he posted on Truth Social last month. You should lower the rates by a lot. Hundreds of billions of dollars are being lost. And this is true. The cost of interest on the national debt, even though when I've done my previous videos talking about most of the debt is owned by U.S. organizations, investors, agencies, et al., still that high interest rate is costing the U.S., you and I as taxpayers. So that's not wrong. In the same post, Trump blamed the Fed board, saying they were doing their job properly. Our country would be saving trillions of dollars in interest costs. We should be paying 1% interest or better. Whether the 1% or better is true or not, either way, the first part is true. It's the costs on the debt. And it's costing you and I too, by the way. It's not just the U.S. debt, it's costing you and I. It's more expensive for you and I to go buy a house. It's more expensive for you and I to go finance a car. Now, we have the choice to finance. We could pay cash for these things. Oh, but Bob, I don't have, $300,000 to buy a house, and therefore we finance. Oh, Bob, I don't think it makes good sense for me to buy a $60,000 car with cash. It probably should be financed, but it's costing me 8%. That's the point, right? 6% would be better. 4% would be even better than that. That's half the cost. So the interest on that debt drops. So therefore you have less expenses, you have more cash flow, you're able to do other things. That's kind of Trump's point as well, is that if you're not spending your expenses on interest costs, then you have more cash flow to go put money into other things in the economy to create other tax revenue for the government. The government, don't forget, the government is a business. Folks, it's a business, and its way that it generates revenue is taxes. That's why the tariffs have been so vital and important. It's a revenue stream. We've done an episode on this as well. Okay? So in a business, you have your revenue, you have your expenses, and you have your profit and loss. That is the profit and loss statement. Trump's looking at our profit and loss statement as a country and saying, we're losing tons of money every year. I need to help make business decisions in these various different categories, which is what he's been doing. And by doing tax slashing, the big beautiful bill giving you and I taxpayers, yes, that reduces revenue for the government. But when you and I have less expenses, then we take our extra cash flow, we put it into the economy, which creates more tax revenue, keeps full employment. That full employment means you have a lot of employees, there's payroll taxes and income taxes. Okay? It's a singular rotation of cash flow in business. Trump's focus on interest rates comes at a time renewed attention on the nation's skyrocketing interest payments on its ever-growing federal debt. True. Exactly the point. Interest payments this fiscal year are nearing $1 trillion for the first time in the nation's history. Why is this a question of Powell lowering interest rates then? The president just signed the big beautiful bill, which is expected to add more than $3 trillion to the deficit over the next decade. By the way, the government always, when there's any tax benefit, doesn't matter which politician's in office, they always do this 10-year decade crap. at the end of the day, even though they are making things permanent, what happens when the next administration comes in? Depermanents, right? So if there's not a Republican president or a conservative president coming in after Trump, then a lot of these changes could occur again. There's nothing. So this whole decade crap, this frustrates me so much. Why? Because at $3 trillion, you and I look at this, go, holy crap. Over a decade. We just said, 2016 when Trump first got elected was 9 years ago. That was almost 10 years ago. What's happened in the last 10 years? Right? So a lot happens. And Moody's recent downgrade of the U.S. debt is part because of the increase in government debt and interest ratios. Yeah, exactly. And that's the point. And when the Moody downgrades or the very credit agencies downgrade U.S. debt, what do foreign countries not want to do? Lend us money, which is also a cost. Okay? So if we can't get funds from other countries, then where do we get funds from? You and I. Wake up, people. At the end of the day, it's you and I. We're the responsibility. We're the responsibility partner. We're the ones paying the tax bill, which is why tariffs were so important. It takes some of the load off of you and I. One of the areas to take some of the load off of you and I is lowering interest rates. It has a twofold. Lowering the debt the government owes so we can refinance the debt. It goes under the $1 trillion mark of interest. And you and I get cheaper dollars, and then where we can go invest in the government, the country, invest in assets, and be able to have more cash flow. But even if Trump succeeds in pressuring the Fed to reduce rates, it may not significantly lighten the nation's interest payment burden. The federal fund rate is only one factor that influences the interest rates on the federal debt, which is made up of a mix of short-term, medium-length, and long-duration Treasury securities. Exactly. It seems to be an easier lever to pull for those who want to impact either interest costs on the federal debt or economic growth. The vice president of economic policy at the Bipartisan Policy Center. But it doesn't mean that the action by the Fed will result in an outcome the president or others may want. It's what's indisputable is that America's interest costs have soared in recent years, in part because of the nation's growing debt, and in part because interest rates rose after a period of super low rates, and the nation's combated high inflation earlier in the decade. Here's my thing. What has Trump made his billions of dollars off of? Let's think about this. Let's break down Trump as a businessman. What has he made his billions of dollars on? Oh, real estate in business. Huh. In real estate, one of the things that the left has always said is that, oh, how can you vote for a president who's filed for bankruptcy? Oh, so you're acknowledging that he has experience with high debt. He knows the outcome. And he knows a lever of that outcome is the cost of that debt. Now, the United States law allows a business owner, allows an individual taxpayer, allows a person to file bankruptcy. In fact, we probably should do a whole episode on private equity firms and how they bankrupt large companies by purchasing these cash flowing companies and how they put them into bankruptcy. So a lot of these big businesses that you and I have frequent over the last decade, oh, they've gone out of business because of COVID. No, they've gone out of business because they've been bought by private equity. Private equity has squeezed out the cash flow and the cash and equity out of those companies and forced them into bankruptcy. That's another episode. Here, Trump buying real estate using debt understands the value of debt, also understands the value of over leveraging, and when interest rates go high, how they force a business to have to file bankruptcy relief. So maybe Trump knows what the F he's talking about. Because the left wanted to say this is the problem with him, and what he's doing is saying, hey, that wasn't a problem, that was learning in business. And because of what I've learned in business is what we need to do as a country right now. Huh. That's kind of a good point. Now, he hasn't said that. That's my translation as to hasn't pretty much everything Trump said so far been right? And I'm not saying everything he does and says is right. I'm just saying what he has said thus far hasn't been right. The left, an economist said, if you raise tariffs, you will cause the country to go into a tailspin and spiral down. Unemployment would skyrocket. The stock market will drop. Blah, 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 blah. Everything, the opposite has happened. Why? Because of cash flow, liquidity going into the market, the government receiving tariffs. Have you found your cost of your goods and services to be exorbitantly increased? Not really. They were already increased. But we will start seeing this. And why? It's because it's this whole process of devaluing the dollar some more. This is the big issue. So part of what Trump's trying to do is lower the cost of dollars, knowing that they're going to be devalued. They have to be. And that's one of the strategies of lowering the US debt is by devaluing the dollar. We've done it multiple times in our history as a country. Other countries do it as well. This is the economic tool that countries use. You and I can't do this as personal taxpayers, as personal investors, as individuals, because you and I do not print dollars. We have no control over dollars other than earning it. And how do we earn it? Whether it's W-2 and the type of income and cash flow we are able to earn with investments and assets. Okay. So interest rate costs dropping, taxes dropping, increases your cash flow, allows you to put money into other assets, not purchasing other goods to consume, but to purchase assets to create more cash flow. That's how you build wealth. Now, there will be a large part of the country will take this extra cash flow and they will buy stuff to consume. And they'll be in worse and worse position, and those will be the people who will complain. But if you're a subscriber to our channel, you know that's not how you do things. You can consume by buying assets, things that generate value for you, whether it's cash flow or increased value of an asset, so you can leverage that asset to be able to take tax-free equity and rinse and repeat and buy more assets. Okay. So hopefully this was helpful. If you are a subscriber, again, thanks so much for subscribing. If you're not a subscriber, go ahead and hit the subscribe button. We drop episodes every Thursday. Thank you so much for being here. Leave a comment down there and please give us a thumbs up. That helps with the algorithms to allow us to continue to thrive and succeed and in our push to more subscribers. So thank you so much and make it a great day.